Emerging markets are countries in the midst of maturing and establishing themselves economically. Mega emerging markets like Brazil and India have huge populations, entrepreneurial activity, and wealth that's spreading. Today's ETF battle focuses on two emerging market ETFs with very different approaches. So, which ETF is the best choice? Stick around for the answer. This is ETF Battles, and I'm Ron DeLegge. It's great to see you again. This is the place where we congregate to analyze and judge ETFs versus each other. So if there's a certain ETF battle contest that you'd like to see, send me your ETF tickers in the comment section below or on our X feed at ETF Guide. Also, if there's a battle request from another viewer that you like, that you think makes sense, just hit the like button for that comment, and that'll tell us what you want to see. You can also check our Season 5 playlist to make sure the requested matchups that you're making have not already been done. Also, be sure to visit the description section below this video. We've got links to our program judges, so get in touch. We also have a link to our program sponsor, Direction, so be sure to visit there, and lots of other good stuff and resources. So today's ETF contest was requested by a viewer named 6-Tool Baseball. And I've heard of 5-Tool Baseball, but this is a first. And 6-Tool Baseball wanted to see emerging markets, a showdown between Avantis and Freedom ETFs. Thank you, 6-Tool, for your excellent battle suggestion. We've got FRDM going up against AVES. So which of these is the right choice or the best choice for emerging market investors? Well, let's find out. We've got John Davi with Astoria Portfolio Advisors and Athan Psarofagis with Bloomberg as our judges. Guys, thank you for being here.
Good to be here again, Ron.
Hey, nice to see you.
So our 4 battle categories are cost, exposure, strategy, performance, and then mystery. Of course, mystery is where our judges have the liberty of choosing a certain category or factor that they think is really important to today's contest. And it's a surprise. That's why it's a mystery. We don't know what it is. We'll just have to see what they come up with. They can also opt for split decisions if they don't like any of the choices in today's contest in a certain category, or they can nominate wildcards. I've got the scorekeeping chores, and at the end of the program, we will declare an overall winner. Keep in mind, none of the battle outcomes are ever predetermined or known in advance by myself or our judges. Let's kick things off with the first category, cost. John, please get us started.
Sure. So the Avantis fund is 36 basis points. The Freedom ETF is 49 basis points. So AVES wins. It's cheaper. Not a ton, I would say. And you should always look at trade-in, liquidity, bid offer, and then as well as the active share. Like, are you paying the right amount for the exposure you're getting? I don't think these are egregious for emerging markets, but just purely on math, like, yeah, AVES wins by a little bit over the Freedom ETF.
Athan, you're up next. How do you see it when it comes to cost?
Yeah, all good points. There's always like really cheap ways you can get emerging market exposure as low as 7 to 9 basis points for some generic fund. But like John said, I don't think this is crazy expensive for what you're getting and for the exposure. But I think they're both a couple $100 million in assets. The Avantis product is pretty new, but I think just it's got a little bit of an edge at 36 bips versus 49. So I'll give the advantage to the Avantis product.
That takes us next to exposure strategy. And Athan, you're still up, so break down your analysis for us.
Sure. So we'll start with the Avantis one. They're actively managed. They're kind of like a spin-off of DFA type. So as you can imagine, it's very factor-based. This is a value fund. So it's just looking at emerging market stocks with some sort of value tilt. So I think the big story here that obviously what's been happening in the market recently is China exposure, right? And so in a normal EM fund, you get about a quarter to 30% China exposure. You're a little bit underweight China here, but you're still getting about 18% China exposure, very big in India exposure. So I think it's just like a pretty good active broad EM fund. Freedom is completely different. And what this does, also EM, but it looks at stocks based on something called economic freedom score. So basically, like how free is the country? And as you can expect, there's no China exposure, there's no Turkey exposure, there's nothing like that. So they're both a little bit different. You're going to get China Advantage, you're not going to get any China in freedom. So just because of the uniqueness and depending on what your views are in China, this was going to matter, like which one you pick. But I think just because you do sometimes get other China exposure other ways, like versus, let's say, revenue of the S&P that's tied internationally and things like that. Freedom is very, very unique for that. So just because of its uniqueness and not having any exposure to China, which has worked, again, that's always backwards looking. But I'm going to give this one to the Freedom product, FRDM.
Excellent analysis. Thank you, Athan. John, you're up next. How do you see it?
So, when it comes to emerging markets, the analogy I always like to give is like, do you go out and buy the Russell 3000 index, right? Like the whole entire U.S. equity marketplace? Like, no, people choose S&P 500. That's, generally speaking, like large, kind of higher quality stocks. Or you can go Qs, which is super high tech. The concept of emerging markets for the last 20 years is like, oh, buy the whole index. But I don't think, there's so many differences between each country and region that I don't think that that's the right approach. I think you should be much more targeted. So in the case of like the Freedom ETF, obviously excludes China, which I think, long-term communism is not probably a winner. Now, if you're like, a trader like David Tepper, like sure, you could buy Chinese stocks. They're cheap and you can lever up, use options. But if you just look at the long-term return of Chinese equities, it's basically flat to zero. You get peaks where they go up a lot and then they crash. And I think communism is probably not the right factor to kind of harvest. So I would lean more on like Freedom ETF because I do think there's what she's doing. I don't think you should buy the whole emerging markets. I think you should pick and choose which factor, region, sectors you want and invest in it for whatever reason. If you think commodities are going to do well, if you want inflation-linked kind of countries and assets, like you go and you buy like EWZ, ILF, right? Like, or if you just want technology exposure in emerging markets, maybe you do like EMQQ, right? So I like what Perth is trying to do with FRDM. Obviously, she timed it perfectly because China's done nothing, and specifically the last 3, 4, 5 years. So you'll see that in the performance. Whereas Avantis, I think, is just much more like what our firm would do, which is like kind of buy higher quality stocks, use factors, to kind of get exposure to all emerging markets. But I just don't think that really works when it comes to like international investing. So my category win is FRDM.
Thank you, John, and excellent analysis. That takes us next to performance. And give us your take. How do you see these two funds matching up?
Okay, so on my side, year to date, the Avantis product wins by about 400 basis points. But when you look at 1 year, 3 year, since inception, it's really the Freedom ETF that's won. In some cases, by a decent amount, and that's just because China has been a negative contributor to emerging markets. The last 1, 3, 5. So Freedom wins just from historical performance. You should never buy an ETF because it's what it's done in the past. You should buy it based on what your expected returns are going forward. I think China is somewhat difficult, long-term winner. So I would lean and pick and choose which sectors, regions, part of emerging markets you want for whatever reason. So Freedom seems to fit the bill for what I philosophically believe in. So I would give that as a category winner on a forward-looking basis.
Athan, you're up next on performance. How do you see it?
Yeah, it's a close one, but this also kind of validates something that John was saying earlier about kind of buying broad EM. With either one of these, you would have beaten EEM over. So it's just good. It seems like both these approaches are working. And even in the last couple of years, just the tilt of the ETF market has been going towards products that have ex-China, right? So there's like quite a few ex-China products. They have a lot in assets. Some have a lot more than FRDM. But even if you look at a big competing product like iShares EM ex-China, Freedom does even better than that one, but that's got 17 billion. This has only got just shy of a billion. But it's actually even done better than let's say ex-China index. But I think similar to what John was saying, just on a forward-looking basis, the Chinese China stock performance tends to be really sporadic. So it could be periods like really strong bouts of outperformance. But I think over the longer period, the Avantis fund is pretty new. It's only a couple of years old. I do like the active approach too there, but I think that the performance edge here is going to go to, I'm going to give it to Freedom.
Well, that takes us next to the mystery battle category, where our judges could pick a certain factor or thing that they feel is important to today's contest. So I'm going to ask you, Athan, what is your mystery battle category and which of these ETFs wins it?
I'm going to look at something that's a little boring, but on the tax side, and maybe it doesn't necessarily, you don't need to know like the inner workings of it, but with EM funds, sometimes they're a little bit more difficult to run for the ETF issuer. Like they can't do things in kind, or they can only, so operationally sometimes it becomes a little bit difficult. So if you look at FRDM, it's paid out a capital gain distribution a few times, so just something to be aware of when you're buying this ETF. In the short term that AVES has been on the market, those 2 years Freedom paid out capital gain, they didn't. So it just seems like from that aspect, it's a little bit more tax efficient, the active AVES product. It's a slight edge, but I'll give that one to the Avantis. Seems like they just haven't paid out a capital gain distribution and do have similar exposure, so they might just be a little bit better in managing that tax basis. But on sort of the tax efficiency mystery category, I'll give that to the Avantis product.
Very good. Thank you for mentioning that. And is it April 14th? I got to check my calendar.
Yeah, when is it this year? Should know.
But certainly a good reminder for all investors, taxes are a very important factor. So thank you for bringing that up, Athan. You're up next, John. What is your mystery beta category, and which of these two ETFs wins it?
So, Morningstar is a pretty big deal. A lot of advisors, people that select funds use their rankings. The Freedom ETF is in the first percentile out of about 800 funds. It's the 49th out of 800. And that's significantly better than the Avantis fund, which is 240th out of 795 out of 800, let's say. So it's the second percentile ranking. So it just, it's performed better. Again, not that should be, the way you think about things going forward. So that's one aspect. And then the second is really just kind of what's the quality of the product. And, Chinese equities are, I would say, lower quality. Quality is a story is true north. We always want to lean on the quality factor. So when you build the portfolios, look under the hood and see, are the underlying stocks, do they have good ROE, ROA, ROIC, and Freedom wins in that. So from performance, Morningstar rankings, and quality, I would give it to Freedom.
All right, very good. We got you down for Freedom, and that brings us to the part of the program where our judges can give us their overall battle winner. How will this go down, John? Give us your overall pick.
I like the Freedom ETF. By the way, it's a really cool ticker, right? FRDM, you kind of say freedom. So whenever a ticker is a word, it generally means that it's reached, kind of star status. I just think that you should not be buying broad emerging markets because, like in the U.S., you don't buy the entire Russell 3000. I think you pick and choose. You want tech, you want large, you want mid, you want small, and I think you should do that in emerging markets. And Freedom is in that realm. So I go with FRDM along with the fact that it's performance, high quality, and nature. So,
Athan, your final chance to weigh in with your overall battle winner.
Yeah, it's close, and a lot of the points that John said, I think exposure is so important. So with like Avantis, you're getting China, and that's not something that you want. That's not the right product with it. But with Avantis, you're also getting India, right? And India's sort of been a very fast-growing market, sort of taking away a lot of market share from China. You're not getting that in Freedom. So I think that's really important. So if that's something that you're looking for, just be aware of it. But that said, the Freedom methodology seems to work, right? It's B and AVES. It seems to work over time. And I like the logic of it, right? Just sort of excluding companies that maybe aren't economically free, and eventually maybe that translates down into their equity market performance. Seems to be working. I like the uniqueness of it. So it's close, but I think my overall winner here is going to be the Freedom product, FRDM.
Well, our judges have spoken, and according to my battle scorecard, today's winner is Freedom. Yes, that's ticker FRDM. And as pointed out by our judges, those are what we call vanity plate ETF ticker symbols. And certainly it's an easy one to remember. Our judges agreed in pretty much most categories. The mystery, there was a little bit of a diversion, a slight diversion with AVES garnering Athan's vote. But for the most part, our judges agreed across the board in all of the categories, including cost, exposure strategy, and of course, the all-important performance category, which seems to confirm Freedom's approach. It is working. Ex-China has indeed worked in the past. We don't know if it'll work in the future, but certainly there's something to be said for the methodology of focusing on that characteristic of economic freedom and the ability of companies to operate without political interference that could possibly be a negative to positive corporate outcomes. So great job to both of our judges for breaking down today's emerging market battle. The other thing I would say too is, and this was emphasized by John, and I think he raised some great points, is being selective. When equity markets are rising as they have over pretty much in 2024, sometimes we tend to forget the importance of being selective in what we own. And so I think that was a very important point. Thank you for bringing that out, John, in today's conversation. So great job to both of our judges, Athan as well, for breaking it down for us. We couldn't have done it without you.
Thanks, Ron. Thanks, Athan.
Yeah, thanks. Nice to see you guys.
Yeah, be sure to visit the description section below. We've got links to both of our judges. They do some excellent work, and they are top of their game in the ETF marketplace, so do get in touch. Also in that description section, we got a link to our program sponsor, Direction, and so check out some of their ETF products, as well as some of the educational resources that they have and we have in that description section below. So which battle would you like to see on the next episode? Send me your ETF ticker symbols in the comment section below or on our X feed at ETF Guide. I'm Ron DeLegge. Thanks for watching. We'll see you on the next episode.